Good morning, everyone, and welcome to Morning Markets from True Potential. Today we'll look at how asset markets performed yesterday and focus in on the UK inflation data that we've had this morning. So just thinking about equity markets yesterday, how did they perform? A negative day for equity markets, although that must be really seen in the context of the strength and the ongoing strength that we've seen in equity markets over the past number of weeks, where European markets have generally trended positively for, I think, the past 2 weeks or two weeks of trading sessions. No specific real reason to think about yesterday in terms of some of the weakness that we did see, but really if you think about some of those factors in the background, they're certainly influencing sentiment, and that's around the COVID virus and the Delta variant and the different responses that we're seeing in different geographies. If we look at New Zealand, their approach there, where we've seen 1 or 2 cases and then a complete lockdown initiated in China, we're seeing a similar tack being taken, which is also influencing activity particularly around ports and areas like that, where there's a very clear linkage into the global economy, the global supply chain, so closing down areas of importance to contain the virus. I think then just the other thing really to touch on in Asia yesterday, where it was a weaker market, ongoing, we've discussed this over the past couple of weeks, the regulatory environment in China. Some news yesterday about the potential for further regulation to influence the technology sector, and that is certainly weighing on sentiment in the Chinese equity market. I think in the US yesterday then, the focus was very much on economic data with industrial production, with retail sales. I'm going to focus in on retail sales because I think it's just worth looking at that, and it also helps us think about how retail activity is captured. And really, what did we see there? We saw the retail activity declined 1.1%, and that's, consensus had been expecting something of around a 0.3% reduction in economic activity from a retail perspective. Keep in mind, however, that retail sales are still up close to 16% from this time last year, so very strong year-on-year growth. And I think the other thing to think about in that context is that with retail sales by value are now above their pre-COVID levels. So again, the fiscal support that's put into the US economy probably pulled forward some retail activity to earlier in the year. So it's not surprising to see those areas starting to come off. And if we think about the mix of that, really about a shift from retail activity, be that online or be it in physical stores, to more of a shift to restaurants and bars as the economies and those parts of the economy continuing to reopen. Turning to the UK, this morning we've had UK inflation data, which is really important in the context of what the MPC are thinking about. The MPC have indicated that they think that the inflation rate may move up to that 4% level. What have we seen today? You can see that in the chart. The inflation rate has certainly come off, coming in at 2% for July versus that 2.5% last month. Market was looking for 2.3, so better than expected there in an inflation trend, albeit there are quirks in the data that are influencing the inflation backdrop, but that does give some support, I should say, to how the MPC are thinking about inflation trending. Yes, a blip up to that 4%, but then coming back to the more normal run rate that they're expecting. Do keep in mind their inflation target is 2%. I'll leave it there for today. Please do join us again tomorrow.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.